Hello folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade, and welcome to our daily fundamental video analysis. In terms of today's price action, the US futures are still trading to the upside with a gain of over 100 points. Now these gains, they typically come on top of what they've already secured yesterday, because if you look at the three major US indices, the price action for these indices, it confirms that the S&P, the Nasdaq and the Dow Jones, they all closed in positive territory with decent gains. Now, as you can see in the chart, the momentum for the Dow Jones index is still very much intact, and this confirms that it is likely for the price action to continue its direction, to continue its move to the upside. Now, when it comes to the S&P 500 index, I have done this very detailed technical analysis, so please do go and have a look at that. But from speculators and trading perspective, the recent data which came out from CFTC, it really demands our attention. And the reason that I am emphasizing on this factor is because the CFTC data shows there could be abysmal price action ahead for the S&P 500 index. Why? Because the bearish bets on the S&P 500 futures are at the highest level since 2015. So this leads me to believe that the price action could be very dismal in the coming days. But when we look at the price action with respect to the moving averages and with respect to technical analysis, it looks pretty positive. So let's see who wins this race. But from technical perspective, I think things are still looking very much hunky-dory, and the prices are likely to continue their journey to the upside. Now, let's move away and shift the focus from technical analysis to fundamentals, which really are driving the markets. So from fundamental perspective, you have two different aspects. On one hand, you have this optimism that the US economy is reopening, and of course this is going to stem the recovery, this is going to bolster the recovery in the US for in terms of its economic growth. But on the other side, we have this pessimism about riots, looting, and National Guards, and Trump not being able to control this whole situation. So obviously, if things continue to get out of hand, and as Trump is calling for more forceful action by the US military to crush the ongoing riots and of course the looting, that could really have some serious and significant impact for the equity markets as well. So this data which we are seeing from the CFTC, that these bearish bets could really be profitable for those speculators. So I think that is the key for us to look at. Now, shifting the gears and moving into the commodity market. When we look at crude prices and Brent prices, the price action is really jaw-dropping. Why? Because no one, not many at least, expected the crude or Brent prices to accelerate their gain at this particular magnitude, because Brent prices, they have already topped the level of $40. They are trading above $40 today. This wasn't expected on March 6th. When prices were trading so low, when the actual trade war started between Russia and of course Saudi Arabia, and especially when the June contract for WTI went in negative territory for the very first time in its entire trading history. Nonetheless, the optimism is very much fueled on these speculations that yes, the current supply cuts are likely to be extended by 1 month or by 3 months. Let's see how that progresses, because we still do not have the final answer. But one thing is for certain, that at 3:30 p.m. London time today, we are going to get the crude inventory data, and the forecast is for plus 3 million in terms of inventories, when the last data confirmed a reading of 7+ million. That is likely to influence the oil prices. So let's continue to focus and gauge that economic metric and see how that is really going to influence oil prices. That's all for today. See you guys tomorrow.